Welcome to the Deep Dive, powered by Talk Tickers. If you're trying to make sense of the market narratives this week, well, the earnings call from NuScale Power Corporation, ticker SMR, is maybe one of the most confusing ones we've seen all quarter. They reported Q3 2025 results after market close on November 6th.
Yeah, this deep dive is really needed because you had these two totally opposing stories colliding, right? You had this staggering headline loss that just shocked Wall Street.
Right.
But then immediately after, they dropped some of the biggest strategic news in the company's entire history.
So our job here is to figure out which story actually matters more. Is it the messy financials from Q3, or is it this huge, potentially transformational pipeline they're talking about for the next decade?
Exactly. Where do you put your focus?
Okay, let's start with the financials, the part that really sent the stock tumbling initially.
Yeah, the market reaction right out of the gate was sharp, definitely negative, and you can see why. Revenue landed at $8.24 million, which, missed consensus estimates. Those were hovering around, what, $11.1 to $11.6 million, somewhere in there.
Okay, a miss, but maybe not catastrophic on the top line, especially given the year-over-year growth was actually huge because of RoPower.
Right, over 1,500% year-over-year growth, but still a miss versus expectations. But that wasn't the real shocker.
No. The bottom line, the EPS, that was the real jaw-dropper. What did the GAAP numbers actually print?
Okay, get this. GAAP EPS came in at a loss of $1.85 per share.
Wow. And the consensus was expecting
a loss of only about $0.13. So yeah, that's a massive miss, almost $2 per share off.
Okay, when you see a number like that, your first thought is, total operational meltdown. Everything's falling apart.
Right. That's the assumption. But management was adamant this wasn't operations collapsing. They framed it as basically a $500 million strategic decision hitting the books all at once.
So we absolutely have to unpack that straight away. Because if that huge miss wasn't poor operations or costs spiraling out of control, how did it happen? How did they justify that kind of hit to the P&L?
Okay, so the main driver, the absolute biggest piece, was this strategic non-operational expense. It was $495 million.
Almost $500 million.
Yeah, exactly. And it was recognized immediately straight into general and administrative or G&A expenses. They explicitly tied it to this partnership with Entrée 1, specifically something called Milestone Contribution 1.
So think of it like NuScale wrote a massive check to their development partner, Entrée 1.
That's pretty much it. And they booked it as a one-time expense, which, completely blew up the quarterly results from an accounting perspective.
Right, okay. That puts the loss in a very different light. But while they're booking this huge charge, they were also shoring up the balance sheet, right?
Yeah.
How's the cash position, the liquidity, looking after paying out nearly $500 million?
They actually did really well on the financing side. Liquidity was strong, $753.8 million as of September 30th. And that big boost came from their at-the-market offering, the ATM program. They pulled in $475.2 million in gross proceeds by selling about 13.2 million shares.
So, yes, they paid out a huge sum, but they also refilled the coffers. They have the capital runway for what comes next.
Exactly. They have the cash to fund this next stage, which is crucial.
And if we look just briefly at the operational expenses, like R&D, are we seeing signs of that shift from pure research to actually building things?
Yeah, subtly. There is a slight decrease in R&D spending, and management specifically pointed this out, saying it's because personnel are shifting. They're moving away from just core R&D.
Towards the commercial projects.
Yeah.
Like the ones actually generating that revenue now.
Precisely. Like the work they're doing for RoPower in Romania, it signals that the business is maturing, shifting focus from just getting the tech approved, which they did with the NRC.
Right, that hurdle's cleared.
To actually deploying it at scale. It's a fundamental pivot.
Okay, so classic Wall Street playbook, maybe.
Right.
You've got some messy numbers, so you pivot hard to the future, the big strategic wins. Management definitely emphasized this, arguing that this pipeline, not the Q3 loss, is what really drives the long-term value here.
They really hammered this point home.
So what was the biggest piece of that strategic news? The one they presumably think justifies that $495 million charge?
Without a doubt. It was the landmark agreement they announced with the Tennessee Valley Authority, TVA, and their partner, Entrée 1.
Okay.
And they're billing this I think credibly, as the single largest small modular reactor SMR deployment program ever announced in the U.S.
The largest ever. Can you give us a sense of the scale? What does that actually mean in terms of power, in terms of reactors?
It's genuinely massive. The agreement outlines a plan to deploy up to 6 gigawatts GW of capacity.
6 gigawatts.
6 gigawatts. And for NuScale's tech, that translates to roughly 72 of their power modules.
72 SMRs.
Yeah, spread across potentially 6 different plant sites, developed by ENTRA1, all within TVA's service territory. And the timeline is ambitious, too. They're aiming for the first plant to start delivering power to TVA as early as 2030.
Wow.
With more phases coming online as demand grows.
6 gigawatts in the southeast.
Yeah.
72 reactors. I mean, just for context, that's getting close to the entire existing nuclear capacity of some major countries, just in new SMRs. What on earth is driving that kind of projected demand?
It's very specific. Management in TVA explicitly linked it to the absolutely surging power needs coming from AI and data centers, particularly in the U.S. Southeast.
The AI power crunch we keep hearing about.
Exactly. These data centers need huge amounts of reliable, 247 carbon-free power, baseload power, and that's something the traditional grid struggles to provide at the scale and reliability needed. SMRs theoretically fit that bill perfectly.
Makes sense. Okay, so that's the massive U.S. deal.
Yeah.
But they're also moving forward internationally, right, with the RoPower project?
Yes. That project in Romania continues to move forward. They're progressing with phase 2 of the front-end engineering and design, the FEED study.
That's the detailed planning stage, right, where they really nail down costs and specifics.
Precisely. It's a critical phase. The final investment decision, or FID, for RoPower is still pegged for late 2026 or maybe early 2027. And importantly, this work provides ongoing high-value engineering service revenue for NuScale right now.
Got it. And then, as if the TVA deal wasn't enough of a validator, there was also this high-level endorsement from the White House recently through a U.S.-Japan framework.
Yeah, this was another really significant piece of news. It's a major public-private investment initiative talking about mobilizing up to $550 billion for critical infrastructure.
Okay.
And in the announcement, NuScale's, NuScale's partner, was the only group specifically named for power development aimed at things like AI data centers, advanced manufacturing, and national defense needs.
The only one named for power.
The only one. Management threw out a number suggesting this could potentially unlock up to $25 billion in investment capital just for ENTRA1's projects leveraging this framework.
That's huge validation, not just from TVA, but at a governmental, international level. It confirms the partner choice, ENTRA1.
It really does. It's saying, the highest levels see this partnership as credible for delivering this kind of critical infrastructure.
Okay, let's circle back then to that $495 million payment, the Partnership Milestone Agreement, or PMA, the thing that caused all the financial noise. Management said it was strategic. Why exactly did NuScale decide to write that enormous check to ENTRA1 up front?
Well, the argument is that NuScale is essentially buying speed and securing their position. They're prepaying for development work, project management services, all the initial stuff that ENTRA1 needs to do.
So stuff NuScale might have paid for over time anyway.
Exactly, stuff they'd typically incur over years as projects developed. By paying it up front now, they give ENTRA1 the immediate capital cushion needed to secure financing, coordinate all the complex pieces, hire the big construction firms.
And basically lock in NuScale's technology as the foundation for that entire 6 GOW program right from the start.
That's the idea. It accelerates everything and cements NuScale's role.
Okay, but what if things change? What if that full 6 GW doesn't materialize? Maybe TDA scales back its needs. Is that $495 million just gone? A sunk cost?
Management addressed this. They highlighted a key feature, a rollover provision. So if a specific project outlined in a term sheet doesn't actually progress all the way to a final power purchase agreement, or PPA,
right,
the milestone payments associated with that aren't just lost. They're designed to roll over and apply to the next project within that broader TV ENTRA1 pipeline.
Okay, so it's an investment in the overall relationship and the 6 GW program potential, not just tied irrevocably to one specific plant deal.
Correct. It's meant to fund the overall acceleration of the pipeline.
Now, analysts on the call did push back a bit, right? They voiced some skepticism about ENTRA1 itself, questioning their track record in actually building massive, complex projects like nuclear plants. How did management handle that?
They defended the partnership structure pretty robustly. They emphasized that ENTRA1 is set up primarily as a developer.
Meaning their job isn't necessarily swinging the hammers themselves.
Right. Their role is to coordinate everything. The financing, finding the sites, permitting, And crucially, hiring the major experienced engineering, procurement, and construction firms, the EPCs who actually do have the track record for building big, complex things.
Okay.
They also pointed to the background of the people involved, the Habush Group principals behind Entry One, saying they have deep experience in large-scale global infrastructure. And frankly, they challenged the analysts, saying, look at the validation you just got.
From TVA and the White House.
Exactly. A 6GW term sheet from the largest public utility in the U.S. and being the sole power developer named in a $550 billion U.S.-Japan framework. They argued that validation speaks volumes about Entry One's perceived capability, regardless of its corporate age.
Makes sense. Okay, let's touch quickly on the capital markets angle. Fluor, the big engineering firm that owns about 40% of NuScale, they set up a way to start selling their stake. This came after some activist investor pressure, right?
Yeah, Starboard Value had been pushing Fluor.
So how does Fluor potentially selling shares benefit NuScale shareholders? What was the deal there?
Management framed it as a natural maturation of Fluor's original investment. Fluor gets to convert its non-trading Class B units into regular Class A common stock, which they can then sell gradually on the open market in an orderly way.
Okay, so Fluor gets liquidity. What does NuScale get?
Here's the key part for NuScale shareholders. In exchange for allowing this orderly exit, Fluor agreed to reduce some of its economic rights under something called the Tax Receivable Agreement, or TRA. They also waived certain claims against NuScale.
Okay, TRA stuff can be complicated, but basically Fluor gave up some future potential value related to tax benefits.
Essentially, yes. Fluor traded some future potential financial benefits related to NuScale's tax attributes for the immediate flexibility to sell their stock. That relinquished value effectively flows back to the benefit of the remaining NuScale shareholders. It cleans things up.
Got it. So, big picture. The technology itself is approved by the regulators. That narrative is kind of over. Now it's all about deployment. What are the key gating factors? What should listeners be watching for next?
Execution. That's the name of the game now. First and foremost, that big TVA Entro 1 framework needs to be converted into concrete, binding power purchase agreements, PPAs. And they need to finalize the specific sites for these plants.
Management sounded confident that would happen soon.
They expressed high confidence in getting those finalized in a timely manner. So that's catalyst number one. Second, keep an eye on Romania. Watch for progress updates on the RoPower feed study, leading up to that final investment decision target in late 26 or early 27. And third, there's the ongoing regulatory side for the actual plant licenses. The KIOLE process combined operating license application. NuScale isn't the applicant, the utility partner is, but NuScale is lending its considerable regulatory expertise to help speed that up. Progress there is also key.
Right. So the story has definitely shifted from can this technology work and get approved to can they actually build these things on time and on budget and get contracts signed. The valuation now really hangs on turning these huge framework agreements, especially that 6GW TVA deal, into a solid funded order backlog.
Absolutely. It's all about disciplined conversion of pipeline into backlog.
Okay, that brings us nicely to our not financial advice segment. This is where we kick around an outrageous but plausible trade idea purely for discussion, based on the real disconnects we saw in this earnings call.
And the standard, very important disclaimer applies. This is just talk for informational purposes. Investing carries risk, high risk, especially in volatile stocks like SMR. Don't take this as a recommendation.
Absolutely. So my thesis here is pretty straightforward. It feels like the market, at least initially, got completely hung up on that $495 million accounting charge, a one-quarter bookkeeping entry,
Right.
and basically ignored the absolutely massive multi-decade strategic potential opened up by that 6GW TVA pipeline and the White House validation.
The near-term cost overshadowed the potential long-term reward, do you think?
I think so. And the stock is incredibly volatile. We saw it spike towards $32 intraday recently before this report. So the trade idea is about leveraging this huge gap between the negative reaction to the charge and the potentially enormous positive implications of the strategic news.
Okay, the market focused on the $500 million cost, maybe ignoring the multi-billion-dollar revenue stream it was intended to unlock. How would you structure a trade around that kind of leverage?
Well, given the crazy volume we saw, over 31 million shares traded intraday after the report, suggests high interest and high volatility. So one idea, a pretty aggressive one, involves options.
Uh-oh.
You could maybe sell some near-dated, deep-in-the-money puts. You're essentially betting the stock has found a floor around its current depressed levels and collecting premium for that bet.
Okay, selling puts, taking on the obligation to buy if it falls further, but collecting cash now.
Right. And then you use that premium collected to help finance the purchase of further out-of-the-money calls, maybe expiring 3 or 4 months out.
So using the put premium to buy upside lottery tickets, essentially, betting on a sharp move higher.
Exactly. The leverage comes from the belief that any concrete positive news, like confirmation of the first binding PPA with TVA, a specific site being announced, or even a very positive update on the RoPower feed study, could force the market to rapidly reevaluate SMR based on that 6 GWW potential.
And potentially send the stock price shooting past those recent highs.
That's the bet, that the 6 GWW number is just too big for the market to ignore once there's tangible proof of execution.
It's definitely aggressive. It requires real faith in Intra's ability to execute and in TVA moving relatively quickly. And you absolutely cannot ignore the inherent risks. Regulatory hurdles, cost overruns on these first-of-a-kind projects are always a possibility. That PMA payment could become a recurring drain if deployment stalls.
Absolutely. High risk.
But the risk-reward, if you truly believe that $495 million was the necessary price to accelerate 6 gigawatts of future orders, well, it's certainly geared for someone with an appetite for that kind of volatility.
So wrapping this up, what's the core tension here? What's the one thing the listener really needs to grapple with from this quarter?
I think it's that stark contrast, right? The juxtaposition of the really messy Q3 financials versus these potentially game-changing strategic announcements. Management is essentially asking you, the investor, to look past the immediate $495 million hit and believe that it was a necessary strategic investment that successfully jump-started the largest SMR program in the country. And you have to say, the validation from TVA and the U.S.-Japan framework provides pretty strong support for that narrative.
So the fundamental question really boils down to this. Do you believe that upfront cost was truly worth the acceleration it bought? Or does that huge expense maybe just highlight the underlying reality that deploying nuclear power at scale is inherently more difficult, expensive, and takes longer than maybe sometimes advertised?
That's the debate.
We encourage you to look at the materials, think through the arguments, and draw your own conclusions. Thanks for joining us for this deep dive.